This mathematician broke the world of finance. With over 66% returns and over $23 billion earned over 30 years, makes him one of the most successful hedge fund managers of all time.
Which will indicate anything about the future.
Let's try to put that in perspective. If you had invested $1 in the S&P 500 in 1988, it would be $40 in 2021. The same amount invested with Jim Simmons would have been worth $42,000. Now, you're probably thinking, how did he do it? Believe it or not, Jim Simmons never originally planned on entering the world of finance. From a very young age, Jim was always passionate about math, pondering over complicated mathematical concepts. His curiosity led him to MIT, where he quickly made a name for himself. In fact, he was so ahead of the curve that, as a freshman, he was already enrolled in graduate-level courses. He was drawn to complex topics like abstract algebra and differential geometry, which would later form the foundation for his groundbreaking work in other fields. He graduated MIT in only 3 years, a clear indicator of his brilliance. But just when he thought he had his life figured out, his journey took an unexpected turn. Due to some undisclosed reasons, Simmons found himself in need of extra money. This led him to an opportunity at the Institute for Defense Analysis. There, Simmons worked on breaking Russian codes during the Cold War. After spending several years in academia, at just 30 years old, Simmons was appointed the chairman of the math department at Stony Brook University. Simmons' academic contributions didn't just stop there. One of his most significant accomplishments was the Chern-Simons theory, a concept that revolutionized the field of physics. But since childhood, Simmons has always looked for new intellectual challenges, constantly pushing the boundaries of what was possible. He took his talents to the world of finance to essentially solve the stock market. Now, this is where Simmons' story gets really interesting, because what he did next would forever change the way the world thought about investing.
I was very frustrated at that point in mathematics. I was very frustrated. There was another side to my personality. I was interested in making money.
Unlike traditional hedge funds, which relied on financial experts and market strategists, Simmons took a completely different approach.
I started alone, but I soon realized that some of these things could be modeled, and I hired mathematicians and physicists and computer scientists because they were good thinkers about building models.
This unconventional approach gave birth to Renaissance Technologies, a hedge fund that would go on to defy every expectation and produce some of the most impressive returns in financial history.
Welcome back, everybody. The most successful moneymaker in modern finance, Jim Simons, has annual returns of his flagship fund Medallion that have actually outpaced those of Warren Buffett, George Soros, or Ray Dalio.
It does so well that eventually it's like, listen, all the other people that put their money in the Medallion fund, give it all back to us. I'll buy it from you. And he only made it exclusive to his employees.
It wasn't just the size of the returns, it was that you took them with surprisingly low volatility and risk.
The Medallion Fund became the highest returning investment fund of all time.
But they were very, very smart.
Yes, they got very rich.
Very, very smart.
And very smart and very rich, yeah. And very high grade, by the way.
Yeah.
Jim Simons.
One of the cornerstones of the financial world is known as the efficient market hypothesis.
Efficient market theory, which says that there's nothing in the data, let's say price data, which will indicate anything about the future.
Because we assume any news we could see as people, someone else had already seen that news, they'd already traded off of it, and whatever I needed to learn from that news was already encoded in some way in the prices in the stock market.
But Jim Simmons and his team proved everyone wrong. The Medallion Fund became the ultimate counterexample. For decades, the fund consistently outperformed the market, defying the idea that markets are always efficient.
Testing it for the U.S. stock market, and what I found was that the hypothesis is false. You can actually reject the hypothesis in the data, and so there are predictabilities in the stock market.
Even during some of the most turbulent times in history, like the dot-com crash and the financial crisis in 2008.
What in the world is happening on Wall Street?
The phones say a lot of their customers are freaked out, waiting to see how low the Dow will go.
When stock prices were at all-time lows, the Medallion Fund somehow performed even better. demonstrating that with the right tools and strategies, it's possible to consistently beat the market. Even though the Medallion Fund's inner workings are a well-kept secret, some surface-level strategies have been revealed through various sources. Rentech is known for spotting tiny, hidden anomalies in the market.
There are anomalies in the data, even in the price history data. For one thing, commodities especially used to trend, not dramatically trend, but trend. So if you could get the trend right, you'd bet on the trend and you'd make money more often than you wouldn't.
Let's take commodities, for example, that go up or down based on seasonality. Think about how certain crops or products fluctuate in price depending on the time of year. These small patterns, when analyzed, can lead to big profits, and they're not relying on gut feelings, just pure data and mathematical modeling.
And you put together a collection of these subtle anomalies, and you begin to get something that will predict pretty well.
Renaissance technologies have also been known to take a lot of leverage, which means borrowing money to increase the size of their trades. By doing this, they can amplify their returns, taking advantage of the inefficiencies they've identified. But here's the key: it's all about managing risk. They've mastered the art of using leverage safely to maximize profits without exposing themselves to excessive risk. All of the strategies mentioned above can be used by anyone, but what really sets Renaissance apart is their quantitative approach to trading. They don't care about the economics behind the asset. Instead, they focus on patterns in the data, looking past market behavior and using complex statistical models to predict future movements. It's all about the numbers, not the story behind the asset. A genius like Newton also ended up losing a fortune in the stock market and famously said, "I can calculate the movement of the stars, but not the madness of men." So how do they do it? Well, Renaissance employs over 100 PhDs in fields like math, physics, and computer science. These experts process terabytes of data every single day, using advanced algorithms to dig through information and uncover those hidden market patterns that others simply can't see. Now, if you're considering jumping into day trading, here's something to think about. You're not just competing with other individual traders. You're up against companies like Renaissance, with massive resources and cutting-edge technology. So before you start buying and selling stocks on a whim, realize who you're really up against.
So it's important for you to understand, if you guys are thinking about doing trading on your accounts that you guys are managing, when you see news happen, you have to assume that everyone bigger than you already knows that.
The future of finance is already being shaped by powerful technologies that are changing how we interact with money. Let's talk about AI, blockchain, and quantum computing, 3 technologies that will impact you, whether you're an investor or just managing your everyday finances. AI is already transforming the financial world by making things like trading, investing, and budgeting easier for everyone. Platforms like Betterment and Wealthfront use AI to create personalized investment portfolios with zero human involvement. In the future, you'll likely have an AI-powered assistant that helps you make smarter financial decisions, adjust your investments automatically, and even helps you manage your day-to-day budget, all at the touch of a button. Blockchain isn't just about cryptocurrencies like Bitcoin. It's revolutionizing how transactions are processed. Ripple is already using blockchain to enable faster, cheaper cross-border payments. For you, this could mean sending money overseas in seconds without the hefty fees. Beyond payments, blockchain could also streamline processes like loan approvals and digital identity verification. Imagine a world where you don't need to wait for days to process a transaction. Everything's instant, secure, and transparent. While AI and blockchain are already reshaping finance, quantum computing is the next big disruptor, and it's closer than you think. Unlike traditional computers, which process data in binary, such as zeros and ones, quantum computers use quantum bits, or qubits, to perform calculations at speeds that were once unimaginable. Companies like Goldman Sachs and JP Morgan are already experimenting with quantum algorithms for portfolio optimization, risk assessment, and fraud detection. But how does this impact everyday people? Imagine being able to instantly calculate your mortgage rate, insurance premium, or investment returns in real time, factoring in thousands of market variables in seconds. As quantum computing matures, it won't just be hedge funds and financial giants benefiting. It will redefine personal finance, making banking, investing, and transactions faster, safer, and more efficient for everyone. If you found this video helpful, make sure to like, subscribe, and hit the bell icon. Thanks for watching.